Let's bring in Team 12's Michael Dowdna. And Michael, the federal government does have protections in place in the event of a bank failure like this, right?
Yeah, that's exactly right. And the best known and most common protection for the everyday person is the FDIC insurance, which simply backs most bank accounts in the U.S. up to $250,000. Now, the FDIC was established back in the 1930s to help build trust in the banking system. They step in during those rare instances that banks fail, filling the gap for insured accounts up to that $250,000 level. And since 1933, the FDIC says no depositor has ever lost a penny in insured deposits.
90+% of people that have money at banks are below that threshold. So I think it's more of the outliers that have deposits above and beyond that. They've got to be a little more strategic in what they're doing and why and who they're banking with. But I think as a whole, the majority of the population should feel quite safe.
And while there is that money limit, there is no limit to the number of FDIC-backed bank accounts you can actually open up. You just may have to spread the money around to different banks, put in different people's names to be able to get that protection. And Jason Fial with Wilde Wealth Management says he's not concerned about any domino effect impacting most people from this.
Making sure that you understand there will always be noise, there will always be news. A majority of the time it won't affect you, but be educated and understand what are these potential risks. But overall, I think rest assured, the U.S. banking system is on solid ground. There's lots of things put in place to protect consumers, and rightfully so.
And since the issues with SVB, we've seen the feds respond in a way to keep faith in the banking system. They declared what happened to SVB and Signature Bank a systemic risk exception, which allows the FDIC to go beyond that $250,000 number. And one thing to bring up here, that the money that you end up seeing that are backfilling these accounts is not paid for through taxes, but through premiums that banks and other financial institutions pay. Guys, back to you.
All right, Michael, thanks so much for tracking all